Moving on, what happened in NFTs? Better question is what didn't happen in NFTs? All right, hello everyone. My name is Pete Humiston. I am the manager of Kraken Intelligence here at Kraken Digital Asset Exchange, and welcome to the March 2021 market recap and outlook webinar presentation. Today we're going to spend some time going through Kraken Intelligence's latest report of our monthly market recap and outlook. In these reports, we take a deep dive look as to what happened last month, what to expect in the months ahead, and what one ought to keep their eye on as we navigate through yet another exciting bull market cycle. In this webinar presentation, we'll include content that is not included in the report itself. So whether you're a trader, an investor, an enthusiast, or you're simply new to crypto, be sure to stick around to the very end because we've got something for everyone. All right, so let's dive right on in. Just as a reminder, this is not an investment advice. Here at Kraken, we recommend that everyone please do your own research when making any investment decisions. Please be sure to consult a licensed investment professional as well. That said, let's move right into things and first take a look at what happened in March for Bitcoin. March was a big month, and we actually saw a new all-time high just shy of $62,000 realized before Bitcoin ultimately corrected 18% intra-month. Although it was a steep correction, it should be noted that we've seen similar corrections, as a matter of fact, worse corrections over the past few months. Back in February, we saw a 26% correction, and in January, we also saw a 30% correction. And as steep as these might be, it ought to be noted that historically speaking, 30% corrections are totally normal in Bitcoin's bull market cycles. So now, despite the weakness in Bitcoin intra-month, we did see it close up 30% higher, and this marked 6 back-to-back months of double-digit gains. Now, appreciation aside, it ought to be noted that we did see volatility and volume come a little bit lower, despite Bitcoin's move higher. Volatility actually fell 40 percentage points to a near 3-month low, while trading volumes fell 5% month over month and came just short of hitting a year-to-date low with a grand value of $255 billion traded last month. Now let's move on to Ether. After a relatively underwhelming February, Ether actually had a nice rebound in March and closed 35% higher, thereby outperforming Bitcoin. However, unlike Bitcoin, Ethereum failed to set a new all-time high and really struggled to break through that psychologically significant $2,000 level. Volatility and trading volumes also did decline for Ethereum. We saw volatility fall 23 percentage points, while trading volume just slipped north of 30%. Now, on some of the more developmental side of things, it ought to be noted that Vitalik Buterin actually came out last month, and he said on a podcast with Tim Ferriss that layer 2 rollup solutions could scale Ethereum's networks by more than 100x in the next few months. Obviously, this is a pretty noteworthy development, considering a lot of the angst and frustration in the crypto markets right now has to do with Ethereum network struggling to really keep up with the demand and lots of network congestion that's leading to abnormally high gas fees. Some of the also more notable developments in the world of Ethereum that took place last month was news that EIP 1559 is officially set to launch with July's London hard fork. Now, this Ethereum improvement protocol essentially means that Ethereum's inflation could approach zero, if not turn negative. It is an improvement protocol that is highly controversial and one that is not necessarily boded too well with some of the miners out there. And so what does this improvement protocol ultimately bring to Ethereum? Well, with this upgrade, there's going to be no longer a single gas fee that goes to miners when submitting a transaction to the Ethereum blockchain. Instead, what we're going to see is a base fee that is going to be algorithmically determined, as well as an inclusion fee. And so the base fee itself is going to be burned. The inclusion fee, also known as the tip fee, is going to go directly to the miners. And so it's expected that this improvement will not only make the network operate better during times of high congestion, but as I mentioned before, with this burning aspect to the fees, and also the tipping that's still going to go to the miners to incentivize participation, you could ultimately see Ethereum's inflation schedule hit 0%, if not turn negative. So certainly a development worth keeping an eye on, and one that folks have been championing for a long time as to why we could ultimately see Ethereum move meaningfully higher throughout the rest of 2021. So what about second quarter? Well, if we take a look at both of these charts, we can see that second quarter historical performance is often positively yielding. So if we look on the left here on this logarithmic scaled chart for Bitcoin, with the exception of second quarter of 2018, we can actually see that Bitcoin has always generated a positive return in second quarter, and actually has posted an average return of 256% for 2Q. On the right, we can see similarly that Ethereum has yet to print a negative yielding second quarter, and actually has a 5-year average 2Q return of about 141%. So, both Ethereum and Bitcoin, second quarter has been certainly historically a top performing quarter, and perhaps, if we see history repeat, we could certainly expect price to trend higher from month-end close of March. So on the developmental side of things, on March 25th, we actually saw Polkadot come out and announce the launch of Parachain auctions and crowd loans on Rococo, which is Polkadot's testnet that is specifically designed for parachains and the related technologies. Now, as a reminder for some of those of you who might not be familiar with the parachains on Polkadot, parachains are the self-sovereign native blockchains that rely on Polkadot's relay chain for security and cross-communication with other parachains. Now, there's only going to be 100 parachains, and each one of these slots will be auctioned off individually. And to secure one of these parachains, one will ultimately need to stake DOT itself. So a lot of market participants have been keeping a close eye on the development of the parachains and the rollout of the auctions themselves, as this ultimately will mean a greater demand for DOT itself as the interest and desire to acquire one of these parachain slots starts to tick up. So in March, we also saw 3 auctions successfully complete. We saw Akala win the very first auction, followed by Plasm Network, and then followed by Kilt Protocol. So, both of those, or all 3 of those auctions were certainly a long time coming for folks who are waiting to see the parachain auctions kick off themselves, and is a development that many market participants are going to continue to keep a close eye on for further insight as to the overall demand for DOT. As again, as a reminder, DOT is ultimately going to be needed to be staked to participate in these parachain auctions and secure one of the 100 parachain slots that are available to those building on the Polkadot network. Moving on to Cardano, it was a less than stellar month for Cardano. After soaring more than 280% in February, Cardano actually came up short this month and was down 9%. However, it should be noted that despite finishing in the red, it did climb as high as 25% intra-month and hit an all-time high of almost $1.50 before entering a correction. On the developmental side of things, on March 31st, IOHK, the developers behind Cardano, came out and announced that the Cardano block production is actually officially decentralized, with the full responsibility of block production in the hands of more than 2,000 community-staked pools. Moving on to Uniswap. So Uniswap actually broke into the top 10 crypto assets after garnering a market cap in excess of $14 billion. And Uniswap actually also hit an all-time high in March of $37.14. This move into the top 10 actually makes Uni the very first DeFi dApp to join the ranks of the largest crypto assets. And part of this move higher can be attributed to a March 23rd announcement by Uniswap, which disclosed some insight as to what to expect with the upcoming May 5th release of Uniswap v3. Now, there's a lot of cool new features that is going to be coming along with v3, a lot of new features that market participants are looking forward to, but most notably is going to be the addition of concentrated liquidity pools. And so ultimately what these pools will give is liquidity providers more options and will have the opportunity and potential to do away with impairment loss risk, which is effectively when the price of the tokens change relative to when you deposited them in the pool itself. So certainly a development that market participants are going to be looking forward to going forward, and lots of excitement, hence the move higher in March. Now, as of month end, it should also be noted that Uniswap stood as the fourth largest DeFi dApp with a total value locked of roughly $4.4 billion, which marked an all-time high as well. Moving on, what happened in NFTs? Better question is what didn't happen in NFTs. I mean, this was absolutely a mind-boggling month for the crypto vertical. Incredible innovation, attraction, interest, and momentum in the space. Everyone and their grandmother was talking about the world of NFTs, and for good reason. So let's quickly distill what happened in March. So of the 10 largest NFT coins by market cap, it should be noted that the monthly performance ranged from anywhere from 65% to just south of 900%. And that puts the average return amongst these top projects at 404%. Absolutely mind-boggling. And so the proof is in the pudding here. We can take a look at some of the more notable headlines that took place in March, and this can really kind of explain why there was so much excitement and momentum surrounding the world of NFTs. So first and foremost, it was announced that an original artwork by iconic British street artist Banksy was burned and actually transformed into an NFT. We saw the popular rock band group, the Kings of Leon, become the very first band in history to release an album as an NFT. Everyone knows Justin Sun in the crypto asset industry. He purchased Jack Dorsey's first tweet for mind-boggling $500,000. Following that was the announcement that digital artist Beeple sold an NFT for a record $69 million via the legacy auction house Christie's. We also saw some interest in the world of sports with the NFL star Rob Gronkowski and Patrick Mahomes selling limited edition NFTs as well. And to wrap up the month, we saw several capital raises in the tens of millions of dollars from both Super Rare, Dapper Labs, and Engine as well. Now, taking a look at daily volume, as you can see on the right here, we can see that the total amount of incoming value to the dApp smart contracts, which is simply just the daily volume, hit a record $34 million on March 11th before finishing the month at $11 million. Now, it should be noted that this is up from roughly $500,000 to $600,000 in daily volume that took place at the beginning of the month, or rather the beginning of the year. So in 3 months' time, we've seen daily transaction volumes grow by almost more than 50x. All right, as the last segment of this webinar presentation, we're going to take a look at a few market cycle models that can be helpful for market participants who are looking to better navigate both bull and bear market cycles. So if at any point in time you like these models and you appreciate them and you want to get continued updated versions of them, be sure to sign up to the OTC Daily. Now that can be done by heading over to www.kraken.com/subscribe/intelligence and entering in your email to sign up for the OTC Daily. Every Monday we send updated version of these charts as well as several others, and they can be helpful tools for you in further navigating the current bull market cycle. So with that said, let's jump right into it. All right, so the first model that we're going to take a look at here is the Ethereum logarithmic regression rainbow. So using historical price action, we can plot logarithmic lines that coincide with historical levels of support and resistance. Now, these bands can be useful for navigating both bull and bear market cycles. However, because this is based off of historical price action, do note that Ethereum does not need to follow these lines to an absolute T. The same can be said of the Bitcoin models that we're going to be seeing in a moment here. Historical price action is simply just that. There's no rhyme or reason that Ethereum has to continue to trending in the same manner or respect these bands going forward. But needless to say, there's still something we should keep a close eye on this market cycle and going forward until proven otherwise. So in this zoomed in version of the same chart, we can see that Ethereum currently resides between band 4 and band 5. Now this is roughly $1,500 and $2,700 as well. Now, what we can deduce from this is that, assuming that Ethereum continues to respect these lines, Ethereum's next big test of resistance is likely to reside around $2,700. Now, as mentioned before, we can use these bands to get a sense for where a market cycle top could potentially be. For example, if we look at band 8, which coincides with Ethereum's previous market cycle top, a test of that level from current day, which is end of March, coincides with roughly a $15,000 Ethereum, or a 700% return from March's closing price. So with this in mind, as Ethereum continues to trend higher, as the bull market carries on, we really want to keep a close eye on how Ethereum trends, and what it ultimately decides to do if and when it tests these bands as either support or resistance going forward. All right, let's take a look at another model. We've got Bitcoin's logarithmic growth curve, which consists of two trend lines that are curved that historically have been proven to signal a market cycle top and bottom. Now, while both of these lines point to price ranges where Bitcoin could either be arguably overbought or oversold, they speak to an underlying property of Bitcoin that can be found in things like social networks, technological innovations, societies, and economics, and that's exponential growth. And so for that reason, we can lean on these curved trend lines for further insight as to where Bitcoin stands in the current market cycle. Now, with that said, looking at where Bitcoin currently resides, we can see that Bitcoin is not yet in overbought territory, which currently is between $78,000 and $103,000. So despite the precipitous rally we've seen over the past few quarters, this model in of itself does not suggest that Bitcoin is quite yet in overbought territory. Now, if Bitcoin were hypothetically to enter into overbought territory, again, this doesn't mean that a market cycle top is in. Simply, this would mean that one model of many indicates that perhaps things are frothy right now, all things considered. But again, as we previously discussed too in the Bitcoin bull market support chart that we previously highlighted, with each day that passes, these trend lines continue to move higher. So if we really want to see, based off this model, Bitcoin hit a higher than expected market cycle top, we want to see Bitcoin continue to trend inside of these two growth curve trend lines without entering into overbought territory and thereby signaling a market cycle top. But as it stands right now, Bitcoin, based off of this model, has yet to reach levels that are indicative of price being in overbought territory. All right, last but not least, let's take a look at Bitcoin's logarithmic retracement curve, which is a model developed by Kraken Intelligence, and is one that uses Bitcoin's growth curve uptrending support line in historical price action to back into an implied market cycle top. Now, since 2011, Bitcoin has long respected the growth curve support line and has historically retraced down to this support line after hitting a market cycle top, as we can see in this chart and the previous chart that we just took a look at as well. Now, when considering that Bitcoin's previous bull market cycles, we'll find that it takes Bitcoin on average 385 days to retrace back down to the support band after hitting a market cycle top. Also, one will find that Bitcoin has corrected on average 86% from previous bull market tops. Now, to gauge where a top could be this cycle, we can use historical corrections to make some guesses as to where Bitcoin might be getting overbought. So first, let's assume that Bitcoin takes 385 days to touch the support curve after hitting a cycle top. Furthermore, let's assume Bitcoin corrects anywhere from 70% to 90% this market cycle. By knowing where the support curve is 385 days from today and using this 70 to 90% correction, we can back into an implied market cycle top. So for example, as of month end, the support curve 385 days from March 31st is $32,600. Now, a 70% correction down to this level over 385 days would mean that Bitcoin would be trading at $108,000 today to be considered overbought. Using the historical average correction of 86% down to this level over 85 days, that would imply that Bitcoin would need to be trading at $236,000 as of today. And lastly, a 90% correction would imply that Bitcoin would need to be trading at $326,000 today to justify being in overbought territory, given what we know about previous corrections and given how long it takes on average for Bitcoin to retrace back down to the support curve line. So, all things considered, assuming history repeats and our assumptions are sound, and the case could certainly be made that at this point in time, Bitcoin is not yet in overbought territory, and perhaps Bitcoin has plenty more room to run this market cycle. All right, and that's going to conclude this month's webinar of the Kraken Intelligence Monthly Recap and Outlook Report. If you want to get more from Kraken Intelligence, please be sure to head over to www.kraken.com/subscribe/intelligence and be sure to sign up for all future content there. Alternatively, if you have any questions, comments, or concerns, or you just want to reach out to us directly, feel free to email us at intel@kraken.com. Last but not least, please be sure to like the video and subscribe for future content, and also check out in the description box below for additional details on some of the content that was discussed in today's presentation. We appreciate your time, and we look forward to seeing you next month.